What if you agree to share income with your partner in that sort of a situation?
Well, and this also would apply to cohabitants, unmarried couples as well.
Yes.
Because since the federal law doesn't recognize the status of registered domestic partnership or of a same-sex marriage, and right now doesn't recognize community income,
Yes.
if you really are sharing the income, what are the tax consequences of that? Now,
Right.
I think if it's community income, it's owned 50-50,
Should
and I
be
think that's
split.
the right law.
And really,
But if
because
it's not,
this is a property based
right.
thing.
And the federal tax law has always followed state property law
Yeah.
to determine what the incidence of tax should be.
Okay.
But if you're sharing income outside of that context, you can do that. But if I'm just giving my partner 50% of my income, then the question is it income to her? Or is it all income to me and then a gift to her? And it's not clear. There are no clear rulings on this. Most people think that I will pay taxes on my own earned income. If I give some of that to my partner, then for income tax purposes, I believe it should be excluded as a gift. Gifts are not included in taxable income.
Yeah. Of course.
But I can't shift the tax burden.
Yeah, and then, well, we're going to talk. Well, actually, we're going to have a whole other program, folks, about gift and estate. So you want to be sure to tune in for that.
Yeah.
So I think we'll not get into that in detail now because we're going to run out of time. What if you're forced to share income with your partner under the community property laws?
Now see, this is the problem with the IRS not issuing much guidance on this. Under state property law, my spouse or registered domestic partner would own 50% of any of my earnings. Now, if I'm taxed on it and the IRS is treating it as though it's mine, what happens if years later we split up and divide our community property evenly?
Yes.
Now, I think that I would get my property, which shouldn't be a taxable event, and she would be simply getting her property, which shouldn't be a taxable event. An equal division of jointly owned property, especially if it's an in-kind division, is not taxable. If it was a joint tenancy or a tenancy in common and we partitioned the property into two separate parcels, that's not a taxable event. So dividing community property should not be a taxable event either. But because of the existence of this CCA, no one's quite sure how the IRS would treat that.
Right.
For husbands and wives, there's no question that they're covered by statute.
Right.
They have a statute, section 1041,
Right.
that says if you transfer property between spouses or to ex-spouses incident to a divorce, then there are no tax consequences. There are no income tax consequences, and it's not a taxable gift, so there are no tax issues at all.
Yeah.
And the law is simply silent for same-sex couples. Although, you have to remember, 1041 wasn't passed until 1984.
Right.
So there's a lot of law involving spouses and division of property before 1984, and all of that law ought to apply to same-sex couples.
And unfortunately, a lot of those were taxable transfers.
But not in community property states.
Well, if they both owned it, yeah.
An equal division, a substantially equal division. There's a case called Waltz, W-A-L-Z. A substantially equal division of community property was not a taxable event for husbands and wives. But you're right, in other states that didn't have community property, transfers incident to divorce were taxable.
Okay. So time is going. I want to be sure to cover a couple of points, though. Okay, can a prenuptial agreement reduce some of this uncertainty?
Well, certainly. I mean, a prenuptial agreement simply says, rather than having community property, we'll have all my earnings be mine and all of my partner's earnings be hers. So it certainly makes clear what's happening. But the problem is, if you want the benefit of the community property regime, you don't want to have to enter into a prenup to opt out just because federal tax law is uncertain. And there's certain benefits under state law and state income tax for having community property.
Right. Okay. And, okay, we really wanted to cover today, though, a couple of issues. So, one, can you claim a partner as a dependent?
This is a good question. This comes up all the time. The definition of dependent is in Section 152 of the Internal Revenue Code. They changed it quite a bit a few years ago, so that there are two ways to be a dependent. One is to be a child, a qualifying child. Well, your partner's not your qualifying child, so we can just ignore that. The next section is about a relative. And a lot of people look at that and say, well, if my relationship's not recognized, she's not my relative either. But if you read the entire section, you realize you can claim your partner as a dependent if she or he meets the test of a member of the household. If the partner lives in your household that you support for the entire year and you provide over half the support, and if your partner does not have sufficient gross income in excess of the dependency exemption amount, yes, you can claim your partner as a dependent.
Okay, final item. What about domestic partner benefits, like employee benefits, I guess is specifically we wanted to talk about. Are these taxable to the employee?
Right.
What happens here?
Of course, who knows what the future will be
Yes.
on health plans. We'll find that out
Yes.
Pretty soon from Congress. But right now, if your employer provides you and your domestic partner health plan coverage, the rule is that to the extent the coverage goes to a spouse or a dependent, it's not taxable. But if it goes to someone who's not a spouse or a dependent, like a domestic partner, it is taxable. It's taxable to the employee, not to the domestic partner. So the employer reports that as extra taxable income on the W-2. But if you read the provision very carefully, you will see that so long as you pay over half the support of your partner, she or he can qualify as what I will call a medical dependent. That means they've got to be a member of the household, you've got to support the household, you've got to pay over half the support, but there's no gross income requirement. There's nothing, the gross income amount. So if I earn $50,000, my partner earns $30,000, I am probably, I could well be paying over half of her support. It's what I actually pay for her support. She could be putting money away in savings and I could be paying all of the household expenses. If that's the case and I'm paying over half of her support, then the benefit of the health insurance plan that my employer provides should not be taxable to her, should not be included in her gross income. And most employers don't know this.
Right. And now you're still talking about domestic partner, but we're also talking about the same-sex spouse.
Same-sex spouses, because
Yeah.
under DOMA, of course, same-sex spouses are not recognized as spouses.
Okay. Went fast. We're
Yes.
really basically out of time. So is there maybe an item or anything that you wanted to just maybe a last thought to throw out, or?
No, I think this, I think this point about domestic partner benefits is really crucial. I mean, if people out there are paying taxes, look at your W-2. If you're paying taxes and you don't think you should be on this, consult with your HR department, your employer's HR department, and talk to your CPA. It really, there are many people. I could name 20 employers right now that are doing this wrong.
Well, they're doing the best they can, but nobody understands this stuff.
But the IRS isn't giving any guidance
Right,
either.
no guidance.
That's another complaint I have.
Yes, right. Okay, well, like I said, we're out of time.
Okay.
Thank you so much for joining me today. I really appreciate it. It's been such a pleasure having you here on this show. And folks, I think this is, you can see this is a huge topic, but it's a way to get started. And we hope that you'll find this information valuable, and we hope we'll see you next time on Financial Insider Weekly.